Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because I truly can't believe there's still people out there arguing about recessions and market crashes. And I see almost nobody talking about the fact that the FTX creditors are about to receive $16 billion of cash over the next few weeks. While Bitcoin has been consolidating below its previous all-time high and going sideways for 6 months, something we have seen each and every cycle during Bitcoin's reaccumulation phases before it finally enters price discovery and expansion. And I know not all of this money is going to come piling back into the space. There are going to be some investors that were burned very badly and perhaps might give up hope. But we do have to remember that this $16 billion was lost in November of 2022, and these investors held through not one, but two 50% corrections in Bitcoin. So you can imagine what the altcoin corrections were like. And they did not capitulate during that consolidation we had in the low 20,000s. And they finally lost their money by force in November of 2022. And perhaps some of you watching this were involved in that. So these are people that believe in the space. They're quite involved in it. They did not capitulate during the bear market. And it's likely that a good portion of this cash will come piling back into the market. And if I know it, then the ETF issuers, the market makers, and the whales definitely know it, which means it's very likely that price goes higher in the short term and the creditors end up getting that cash back when the market is rallying. And there's a lot of FOMO in the air, which forces them to pile back in versus the market makers and whales letting the price sell off aggressively, bringing in a ton of fear and uncertainty, which would result in a lot less cash coming back into this market, and it would allow those FTX creditors to buy back in on a 50% discount on Bitcoin. And I just don't think the market makers and whales are going to let that happen. And I think it's way more likely those creditors will get their money back during an insane rally where they have no choice but to chase it and pile back in at high prices. Now, I don't know exactly what week they're going to be getting back that cash, but my target for an all-time high break is November, because I think it would be incredibly poetic that Bitcoin entered price discovery in November of 2020, Bitcoin topped in November of 2021, Bitcoin bottomed and FTX went under in November 2022. Bitcoin broke out of its range as we were approaching the ETF launch in November of 2023. And that's also a great example of the market front-running inflows. We knew the ETFs were likely coming in January, and the markets front-ran that by rallying into the event. And I think this time is going to be no different because everybody knows the creditors are going to be receiving that cash over the next few weeks. And I'm sure you guys have noticed I've had a slightly more bullish tone over the past few weeks, and this easy cycle scenario has been growing on me. I know I keep changing the adjective for how to describe this cycle, but the words never really seem to fit right. But I think easy cycle makes the most sense. Just Bitcoin rallying and then going sideways and rallying some more. The delayed cycle would require something crazy happening with the election and a lot of uncertainty that makes things take a lot longer. And of course, the failed cycle is quite self-explanatory, but my base case as of right now has switched to the easy cycle because of this cash infusion that the market is going to be seeing, and the fact that I think the market is going to front run it by breaking out earlier. But of course, I'm still prepared for the other two outcomes in case they happen, but it's hard to ignore the writing on the wall right now with that cash coming on the way and a lot of central banks starting to pivot to easing. So I am open to Bitcoin breaking out a little bit earlier and perhaps seeing new all-time highs by December of this year. It's also quite convenient that we have a very simple and clear invalidation. We said that Bitcoin would likely break higher if it were able to reclaim 61.5K, its range low going all the way back to February of this year. And after we got that close above it last week, continuation became very likely, and we can really start to get bullish and really start to expect upside once we break out of the upside of this range on a weekly closing basis. But of course, we're going to have to wait and see if that actually happens. But as of right now, really no cause for concern for me, at least, as long as Bitcoin is closing above 61.5K. We can even come down and retest it as support, and then it would become incredibly likely that Bitcoin breaks higher in the short term, especially with the announcements we've been seeing from the major central banks recently. China is arguably the second most important central bank in the world after the Federal Reserve, and the fact that they finally capitulated and announced they're going to be doing stimulus to save their economy, which is going to devalue their currency but increase liquidity, is very bullish for Bitcoin. We know the correlation between Bitcoin and global liquidity historically. When liquidity isn't doing much, neither is Bitcoin. When liquidity is skyrocketing, so is Bitcoin. When liquidity is going down, so is Bitcoin. And when liquidity is going sideways, Bitcoin is kind of consolidating and going sideways. Yes, the ETFs caused Bitcoin to go a lot higher than it should have because of all the hype and inflows we ended up seeing, but Bitcoin won't enter true price discovery until we see that liquidity start to tick up. But with the announcements we've seen from China and the easing cycle that the Fed already embarked on, it does look like global liquidity will be going up over the next few months, which is the exact backdrop we'd want to see for Bitcoin. And I know there's a lot of people who aren't positioned for this because of the fears around the Fed cutting cycles, but I don't think what happened in 07 or 01 apply to today. In 2008, the majority of people had variable rate mortgages, and those Fed hikes absolutely destroyed the housing market and really crushed the economy because of that. And in 01, we had all of those unprofitable .com companies. Today's tech companies like Facebook, Google, Nvidia are very different from the non-profitable companies we saw get overvalued in 2001. So I have a really hard time believing that we're going to see some huge 50% market crash in these current conditions, especially because quantitative easing was invented in 2008 after the great financial crisis. So the Fed had a lot less tools back then to save the economy and step in earlier compared to what we have this time around. And I could actually make an argument that we would have saw a global financial crisis in April of 2023 when Silicon Valley Bank went under and the Fed had to step in and bail them out essentially by giving them the full value of the bonds they held instead of just letting them not be able to meet withdrawals and go under. And because of that QE and that little uptick you see right here in yellow, we were able to avoid that, which keeps everybody a lot more calm and collected, knowing that the money they have in the bank is going to be backed by the Fed, instead of what happened in 2008 when people couldn't get their money out and people were worried that the entire banking system was going to collapse. And that's why I think the comparisons to 2008 are a waste of time. Of course, this party can't go on forever. One day, all of this QE will backfire, whether it's via inflation or people losing faith in the dollar, but this trend can go on for a very long time before that happens. So in my opinion, Fed easing cycles are bullish the same way Fed hiking cycles were quite bearish in 2022. And we're seeing that Fed easing starting to get priced in the US dollar index. It's getting ready to have its first close below its 200-week moving average since November of 2021. And that date must sound very familiar to a lot of you because that's also when Bitcoin topped right as the dollar index was breaking above its 200-week moving average. So if we see the US dollar index break below its 200-week moving average here, that could be what sends Bitcoin rallying higher. It hasn't confirmed that quite yet. It might take another week or two, and there can always be short-term bounces. Everything I'm talking about in this video is more of a 1 to 2 month time frame. We could see anything happen in the next few days. That's just how markets work, but it's very clear the US dollar index is in a downtrend, and downtrends in the US dollar index tend to be very bullish for Bitcoin breakouts and Bitcoin price discovery uptrends. And that's also what tends to result in our alt seasons as well, when the entire market goes crazy and everybody piles in to this space. And speaking of altcoins, we also have arguably the most influential person in this space. Michael Saylor is definitely the most influential for Bitcoin, but for crypto as a whole, CZ is definitely the most influential, and he's finally getting out of prison after his 4-month stay, and it's going to be interesting to see how markets react to that. But it is pretty incredible that we've seen the Coinbase premium come back over the past few weeks, and we're on the verge of having our best September ever. Of course, September isn't complete yet, but I don't know how much of this could be reversed in the next few days or so. But it is crazy to see that we have US investors stepping back in. September is looking pretty solid, and we're seeing a lot of excitement and greed starting to pile back into this market, which makes sense because everybody has been so beat up by the sideways price action that we've seen over the past few months. So even a 10% rally in Bitcoin makes everybody euphoric again. But it's great to see that we have a new all-time high for Bitcoin sitting in ETFs, and we've been seeing very strong inflows over the past few days. Again, I think that's investors front-running the FTX creditors getting back their money and buying in at these reduced prices before that cash starts to come back into the system. And I do think that it's going to be interesting to see when these options go live for BlackRock's spot Bitcoin ETF, because we'll see the amount of put and call buying that investors are going to be doing on the ETF and the types of hedging or betting that investors will be doing to protect their allocation. But it is pretty amazing that we're finally only a few days away from completing this sideways chop period for Bitcoin. So far, this one has played out almost identical to the past decade or so for Bitcoin, outside of those post-halving years of 2017 and 2021. And it looks like Bitcoin might be ending this summer chop period right where it started when we first started talking about this chart in the beginning of June, which was about 69,000. So I think it would be funny if we ended September around that price range as well. So all of that drama, all of that fear, all of that uncertainty just ends up in Bitcoin picking up right where it left off at the exact same price. But unfortunately, I'm sure we lost a lot of our brethren along the way, whether it was to leverage trading or meme coin speculation. But for those of us that have been prepared for multiple outcomes, that knew that September was going to be choppy, it really wasn't that bad as long as you stuck to your long-term plan. And it's great to see that we're entering the best month for Bitcoin historically after having a green September, which is usually a bad month. And of course, seasonality just gives us data on what's most likely to happen, but it doesn't mean that things have to play out 100%. So even though October tends to be bullish, there's a very good chance this could be a red October, even if the odds don't point to that, which is why we're always prepared for multiple outcomes. And I think the main deciding factor will be what happens with this election as it gets closer. We're now only 38 days away, so this election drama is only going to take up the very beginning of November, but the entirety of October is going to be quite election focused for US investors. And it's not really who wins that's going to matter a ton for Bitcoin or for the stock market. It's more the markets not knowing who's going to win and the type of disagreements and drama that can occur as we approach the deadline. And even though it's clear the market believes Trump is better for crypto, we did see a speech from Harris this week that does de-risk the election a little bit. I don't know if they're actually going to stick to what they're saying, but she made a speech saying that she wanted the US to remain dominant in blockchain, which helps de-risk the election a little bit, whether it ends up happening or not. But it is very clear the market believes Trump is a lot more bullish for this space. As for the S&P 500, still looks bullish. These wicks to the upside aren't ideal, but my panic line is about 5,600. As long as we're above that previous all-time high breakout, really nothing to worry about in my opinion, which is good for Bitcoin because the S&P 500 being in price discovery is a prerequisite for Bitcoin to break out as well. So as long as the S&P 500 can remain above that previous all-time high and keep grinding its way higher, we don't have to worry about any type of huge drops from Bitcoin as long as the traditional market backdrop is okay. And it's great to see the fact that for the first time in a very long time, we have higher lows and higher highs coming in on Bitcoin. And of course, we're always open to lower prices being revisited. There can be black swans, so we never want to be all in on one outcome, but it does seem like Bitcoin wants to continue higher here in the short term, and we'll leave some cash on the sidelines to take advantage of lower prices if we get them, but it's looking less and less likely as Bitcoin changes its market structure here on the weekly and starts to put in higher lows and higher highs. And my strategy, as I'm sure a lot of you are aware, is quite simple. In this fair value range, I really don't want to do anything with my positions. If we enter the undervalued region, I will start deploying more of my cash. If we enter the overvalued region, I will consider locking in some profits depending on the situation at the time. But as of right now, there's really not much to do but wait out and see what happens, because our long-term thesis is still in full swing. We have the federal government running a $1.9 trillion deficit this year. They're spending money like the US is in a recession, even though we're not. And it's the reason I believe why we haven't been in a recession, because that spending has been able to keep the economy afloat. But the downside of that is it's devaluing the currency, but that is good for our risk assets. As long as the US government debt goes up, it has to get monetized eventually, which results in the money supply going up. And that's our main thesis for risk assets like the S&P 500 and Bitcoin. And that's why we see a very clear correlation between the US national debt and the S&P 500. After each and every recession or crisis, more debt is issued more aggressively to bring us out of it. That devalues the dollar and puts more upward pressure on risk assets as we see that fiat currency devaluation. And eventually this will cause major issues, but I think it can continue on for quite a bit in the short to medium term. And finally, speaking of recessions, very strong economic data this week. We had initial jobless claims come in at 218,000, which is way below the recession start average. So really no major signs of layoffs. Of course, there's always some layoffs here and there, even in a healthy economy, but we're not seeing the huge increase that we would expect if we were going to enter a recession soon. And we're still seeing continuing jobless claims go sideways to down. It's also about 1 million people below its recession start average. So we're not seeing some huge increase in the number of unemployed people. We are watching the unemployment rate closely because it has been going up recently, and we want to see that trend reverse because this data point can pick up momentum very quickly. But as of right now, it's still below its recession start average of 5%. So really not a ton to worry about in the short term, in my opinion. And as for inflation, still below 2% if we look at trueflation, which tends to be a lot more reliable and accurate than the government data, in my opinion. So nothing to worry about there, even though we've seen a very slight uptick recently. But we did get a very bullish PCE print this week at 2.2%, which is getting very close to the Fed's target. Core PCE is being a little bit more stubborn and might take longer to go down. And perhaps we might have a second inflation scare sometime next year, but at least in the short term, what we've been saying about the labor market not being that weak yet has been on point, and inflation going in the right direction has been accurate as well. And finally, if we take a look at growth, we see the GDP now estimate above 3%, which is well above the 2% target the Fed has. And if we look at it over the past few quarters, still well above that zero-bound recession number, which means we're likely not going to enter a recession at the very least in Q4 of this year or Q1 of next year. And then perhaps we might see more deterioration as we approach Q2 of 2025, but that's a little bit too far out to know for sure. When I look forward over the next few months and I look at the fact that Bitcoin has been consolidating like this over the past 6 months or so, going sideways as those ETFs and long-term holders accumulate, and the fact that we have this incoming cash coming to those FTX creditors, it's really hard for me to be bearish in the short term. There can always be surprises. There can always be short-term shakeouts, but I do think Bitcoin will be trading higher 1, 2, 3 months out from here. But of course, we're going to have to wait and see if that actually plays out. But as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.